Welcome back to TechKidFX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We have also managed to get above a significant high at around the $0.5 mark. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in the formation of these wave 2 in a move that managed to get into the minimum retracement area, which lies between the $0.35698 mark and the $0.28126 mark. And having managed to get into the minimum retracement area in the formation of these wave 2, I believe we have seen the bottom for that second wave, and whatever we are seeing at the moment is the start of an impulsive wave to the upside in the formation of these wave 3. And before I get further into the technical analysis, give you the short-term scenarios, and also sketch out my target areas to the upside in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a recap of what has been happening, where you can see that after seeing our lower low down there, we started this massive run up to the upper side, where we first saw this 1-2 set up to the upper side, then started this Elliot structure, having the wave 1 giving us a peak at around the $0.67 mark. And after seeing the high for that wave 1, we started a corrective structure in the formation of these wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2, which lies between the fib level 0.5 and the fib level 0.618, which is a target area that we fully maximized. And after fully maximizing that target area, whatever I'm expecting next is the formation of these wave 3, and sketching out a target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.33648 mark, and that is the minimum that I'm expecting AGIX to do here on the long-term scenarios in the formation of this wave 3. And in the formation of that wave 3, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation, and having the wave 5 of the 5-wave structure fully maximizing our target areas and also giving us the high for that wave 3 to the upper side. And this Elliot structure right here, which is a fractal wave within the formation of this wave 3, is what is going to give me the short-term scenarios that I'm expecting to play out here on the AGIX chart, and that is better seen here on the 1-hour chart. So jumping to the 1-hour chart, on the 1-hour chart you can see that I have this Elliot structure in red, which is a fractal wave within the formation of this wave 3, where I believe we have peaked in the formation of that wave 1. We have also seen a corrective structure in the formation of this wave 2 in a move that has managed to get into the minimum retracement area in the formation of that wave 2, which lies between the $0.42381 mark and the $0.39292 mark. And having fully maximized our target area in the formation of that wave 2, whatever we expect next is the start of this wave 3 to the upper side, and sketching out a target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.85707 mark, and that is the minimum that I'm expecting AGIX to do here on the short-term scenarios. And for that move to also play out, we need to continue holding above the 20-day MAs, both on the 1-hour chart and also on the 4-hour chart. And here on the 1-hour chart you can see that we have lost the 20-day MA, and at the time of this recording we are seeing a bit of a breakdown to the lower side, but I think this is no reason for panic, because in the formation of this wave 3, which is an impulsive wave, I'm also expecting to see another 5-wave structure in formation, and there are chances that we might have peaked in the formation of this wave 1 at around the $0.59 mark, and that's the reason as to why we are seeing a bit of a breakdown here on the charts in what could be the formation of this wave 2 before we can continue gearing up in the formation of that wave 3, then expect a wave 4, then a wave 5 to fully maximize our target area at around the $0.85 mark. So that is what I'm expecting here on the AGIX chart. And in case the breakdown that is happening at the moment continues, then we need to have a target area in the formation of that breakdown to the lower side by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, and that gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618. So in case the breakdown continues, we need to continue holding between the $0.5016 mark and the $0.48059 mark, and the moment you continue holding above that, then that will be enough confirmation that we are seeing a wave 2 before we can continue gearing up in the formation of that wave 3 to the upper side. So that is what I'm expecting here on the AGX chart, on the long-term scenarios and also on the short-term scenarios. And getting back to the 4-hour chart so that I can take a look at the indicators. On the RSI, we are trading at around the 61 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, we have been able to print a bullish cross fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.